Today I'm talking about the 3 steps of investing in microcap stocks, also commonly called penny stocks, nanocap stocks, picocaps. They are all different yet all very similar, and I'm not going to get into what is or isn't a penny stock because everybody has a different opinion. I am also not going to spend a lot of time discussing why you should invest in microcaps. You're here watching this video, you're curious, but you're also putting in the research, and that's a great first start. Generally, what you will hear in microcaps is one group of people talking about how their favorite microcap stock is up 500% and how much money they made, and then another group of people will begin talking about how all microcaps are garbage, money-losing stocks. Both are partially true. I've seen a lot of intelligent investors drop down into the microcap space without knowing what they are doing. They pick some really cool looking microcap stock with a great story and then they lose all their money. I've also seen good microcap investors consistently find stock after stock that outperforms the market, and these people make a ton of money. The trick is learning from the right people. And this is a great first step to get your microcap brain going, get you thinking, and get you started in the right direction. Surround yourself with good people. The reason most people lose money in microcaps is because the majority of people discussing penny stocks are greedy, spoiled children looking to pump and dump a stock. Most of these spoiled children are also paid advertisers, meaning they are literally being paid to sucker people into investing their hard-earned money into a money-losing stock so it can pump and dump. But unfortunately, that's how most people find penny stocks. The promise of easy money, that finding 100x stocks, 10,000% returns is just normal. Or you're going to find the next Nvidia $1,000 per share stock and you're going to buy it for a penny or less. Anyone promising you anything in microcap stocks, penny stocks, it's probably a paid promotion and a pump and dump. Somebody looking to take your money and put it in their pocket. And if you don't believe me, just go look for yourself. There are dozens of companies just like this one where companies, stocks on the stock market are paying for results. They literally say right here, 22 million unique investors targeted. They are targeting investors. They are targeting you. They pay influencers to like a stock and suck you in. It pumps up and then it crashes down. But here's the problem. You also can't do it alone. There are thousands of penny stocks. To be a good microcap investor, you are looking for the top 4% of these thousands of stocks, and there is no AI program written yet that can help. So you have to surround yourself with good people. These are just a few of the more major groups that cover microcaps that I enjoy. Small Cap Discoveries in Canada, Microcap Club in the United States, Keystone Financial. There are hundreds of other good independent microcap investors out there on social media, operating Substacks, or providing content for Seeking Alpha. And every good microcap investor I have ever met also provides good free investment ideas, also just important, good free stock ideas. This is a terribly embarrassing picture. It looks like my toddler put this one together and not a 43-year-old man. But essentially what I'm trying to say is that to become a good microcap investor, you are trying to take all the microcap stocks, 100% of the stocks, and immediately throw 80% of these bad stocks in the garbage. Whatever bad stocks are to you. Then with the remaining 20% of stocks that pass this initial chopping block, I am researching these stocks and pulling from them 80% that don't meet my criteria. So at the end of the day, I am looking to build a list to maybe invest in the top 20% of the top 20%, or about 4% of the total stocks out there. So step one is simply to drop the penny stock pumpers, find some good microcap stock investors to follow. It will give you good stock ideas. It gives you a good idea of what good investors are looking for, and it will save you time. Education and research. Kyle Grieve, who by the way is a good microcap investor, asked the question here, confused why more people don't invest in microcaps. My response is that most investors either don't read earnings reports or can't read earnings reports. If you don't read company earnings, company financial reports, then investing in microcaps is just not for you. You're simply guessing, and you will lose 90% of your money. But if you're willing to read and track company earnings, it will give you a significant, somewhat cliched superpower advantage in investing in microcap stocks. Just for example, investing in most stocks like Tesla on Seeking Alpha here, there is one article per day from an investing professional giving their opinion. Or just skip all that reading. Most of these services give you picks for money. It's always shocking to me how many people will own a stock, call themselves a retail investor, and really not know why they even own the stock. In microcap stocks, you can't do that. Even for the few groups that do have a paid service and do recommend some stocks, it's really just the beginning of your research that they initiate. You can't invest in microcap stocks without doing some of your own due diligence. And unfortunately, that means reading earnings reports. Here in Canada, that's on CDAR, and yes, you have to read some financial statements that look like this. Over in the USA, you're looking at the sec.gov site under Edgar, and instead of reading one article per day on Tesla, you could actually go read their earnings report. And I know what you're thinking. Before you run away screaming because you don't want to read this much information, it's actually not a lot. Your average microcap stock has 21 pages or less in their earnings reports, and this is about as complicated as the financials get. Compared to the most recent Tesla report, which was 111 pages, and you could see here, like, this just terrifies me and why I don't invest in a stock like Tesla directly, because just looking at revenue and cost of revenue, you're looking at 10 different accounting lines. This is way too much work. Reading microcap stock earnings reports really aren't that hard. It's fairly simple numbers. You're looking for what's trending in good directions. You have an income statement, you've got a balance sheet here with assets over liabilities, looking for what they own and what they owe, how much dilution they have, how many shares they're selling, and finally what they're doing with their cash. And literally you can read that from top to bottom. It's quite simple to understand. So research and learn and research some more, ask some questions. It's really not that hard or scary. There are so many resources out there. Any question you have can be answered by Google these days or ChatGPT. You know, people are getting online degrees. It's not impossible to think that you can learn some very basic accounting for some of these small public companies in a very short and easy amount of time. And these are the types of rewards you can get. ADF Group is up over 400% in 1 year. It's a 10x stock in 5 years, and it's still growing. Hammond Power Solutions up 32% year to date, 126% in a year. It is a 10x stock in 5 years. It's up 15,000% all time. Back at the start of COVID, you could have bought Hammond Power Solutions for $5. This is life-changing microcap stock money. So, I mean, kick up your feet, grab a coffee, research some stocks, not by reading other people's opinions. Find your own stocks using step one, then go read their earnings and form your own opinion. It gives you an advantage over probably 99.999% of every other person investing money in the stock market. It will give you opportunities better than expected, and it will give you the chance to invest before just about anybody else before price rockets up, right? You will not regret it. But finally, step three, and arguably the most important part. So in step one, you went and found some good microcap investors. You got some good microcap stock ideas. In step two, you learned how to go research those stocks. But how can you tell if they're a good stock, a good investment or not? What's the difference between good microcap stocks, good investments, and bad microcap stocks, bad investments? Unfortunately, I can't tell you that. Why? Because you need to learn your own strategies. It's not financial advice. None of this video is financial advice up to this point, because I don't want you to just copy me. I don't want you to copy Ian Castle or Paul Andriola or any other fantastic microcap investors out there. You educate yourself and you learn as much as possible from other people, and then you apply it to what works for you, what your strengths are. But okay, I get it, right? Don't get angry. I'm not going to end this video with a find your own way, grasshopper kind of statement. I'll talk about some things that I'm looking for in good microcap stocks, though please keep in mind this is not necessarily the right way to invest, nor is it even the best way to invest. It's just how I invest. And I'm not a financial advisor, and I'm definitely not your financial advisor. I'm just some guy talking about microcaps on YouTube. Very simple here. I basically condensed about 6 hours of videos into one slide. 4 things that I'm looking for at the bottom. My yes stocks is I'm looking for good, legit companies that are growing revenue, growing earnings, growing cash, and with low share dilution, right? These are companies that have product market fit. They are selling a product or service that is increasing, that is growing over time, and they're managing it well. What I am not looking for is all the hundreds, maybe thousands of these pre-revenue, what a cool story, hopium stocks. Usually these are very complicated. Social media people will pump it up with very complicated stories. I call this paid popular, where a stock is popular on social media thanks to all the paid advertisements. But if you go look at the share price, it just pumps up and down, up and down. And usually these companies are doing it because there's a lot of share dilution where they're trying to take your cash and give it to the company. That's what I'm not looking for. Now, if we zoom in a little closer from the yes stocks to the hell yes stocks, we can look for some more specific things, right? Revenue growth of 25% or higher. I'll accept a little lower. Other people are looking for a little higher. Earnings growth of 15% or higher. Sometimes the companies aren't quite profitable yet. They don't have earnings, but I'm looking at them reducing their earnings loss to the point where they're going to become profitable. There's some kind of inflection point there. I'm looking at cash growth. I don't really attach a number to that. I'm really looking at how they utilize their cash. Are they spending cash in a good way? And then finally, I'm looking at their valuation in the single digits. It's really that simple if you're a beginner, if you're looking at price to sales, price to earnings, EV over EBITDA. A lot of those figures, if you could find stocks in the single digits under 10, that's usually a pretty good valuation. If I need to simplify in one slide what I'm looking for in a good microcap stock, it is this. I really compare it to playing Texas Hold'em poker. If you've ever played that game, if you're experienced in it, you know that every hand you're dealt has certain odds of winning. Investing in microcap stocks isn't that different, where you do your initial research, you calculate the risk versus the reward, how much of a chance you think that this stock has for potential of being a good company and making you money. And then with every earnings report, every 3 months, those odds change based on the numbers, the cards that they show you. So yes, we've all had that friend who's got no idea what they're doing. They go all in with a low percentage hand and they win. And we're left thinking, what am I doing wrong? But ultimately it doesn't work. If you constantly go in with low percentage chances of winning, over the long term, you're not winning. You're going to lose money. If you want to consistently make money in microcap stocks and a significant amount of money, you need a strategy. That strategy has to be built around reviewing the earnings, reading the financial statements, looking at the numbers, calculating those numbers out, and putting yourself in the best position to succeed more often than not. Just like poker, it's very much a balance of reward versus risk. And while you can never get it right 100% of the time with microcap stocks, because they're so undiscovered, because there are not a lot of investors out there looking for them, you can find these stocks that really can outperform the market significantly. So what do you think? Am I missing any steps to consistently making money in microcap stocks, penny stocks? I'm all ears. This is always a constantly changing industry, if you can call it that. There's been changes with artificial intelligence. There's been changes thanks to social media. You are always learning and growing. I absolutely love that, where every year I learn something new. With almost every company I research, I learn something new. And at the end of the day, if I can make a lot of money doing it, that's what I'm looking for. Good luck. I hope you make a lot of money investing yourself in whatever you do. You've been watching Common Sense Investing. My name is Cameron. I hope to see you again soon.